In this video, we're breaking down a trade using the seasonal tendency and the inversion fair value gap. This move wasn't random. The low in March was already anticipated, not from price alone, but from historical tendencies. And what followed was a textbook expansion higher, and the entry itself was confirmed using inversion logic. Going into March, price had already been trading in a corrective phase. We can see a gradual distribution lower, weak structure, and eventually a push into sell-side liquidity. The sell-side liquidity rate is important because it aligns with the data is suggesting all along. As you can see on the data table, we can see a low formation in March. Using the seasonal tendency indicator, we can observe something consistent across historical data, and that's that March low. It's not randomly, but it repeats across the 5-year data, the 10-year data, the 15-year data, and the all-time seasonal. And immediately after that low formation, we typically see a shift into bullish conditions. And it's usually followed by a gradual expansion into the second half of the year. So instead of reacting to price, the framework already gives context. The expectation is a accumulation into an expansion higher. Now, combine that with price action. What does price do? It trades lower in March, sweeps sell-side liquidity, and begins to stabilize. This is where narrative and price action start to align. And at this point, the focus shifts from, is the market bearish to where is the long opportunity forming within this framework? And this is where the IFVG comes in. After the low is formed, price starts to displace higher. During that move, an inversion fair value gap forms right here. This is key, because instead of chasing price, we wait for retracement into that inversion zone, and that zone acts as a point of re-entry within a developing bullish narrative. So the model becomes a seasonal low is identified, displacement confirms a shift, and IFVG provides the entry location. Once price respects that IFVG, structure starts to continue higher, momentum builds up, and price expands into buy-side liquidity. And this completes the sequence, from liquidity to a reversal to a confirmation into an expansion. The important part here isn't just the trade, it's the process. Instead of relying on a single concept, the seasonal tendency provides context, price action confirms behavior, and the IFVG tool refines execution. Each tool has a role, and when they align, the decision-making becomes structured rather than reactive. If you want to approach the market with this type of structure, instead of guessing directions, these tools are designed to map that process out clearly. You can find them in the 2 Degrees collection. Make sure to join the Discord down below if you want to learn more.